What's going on, YouTube? We are here with another episode of the Trading Academy. This is episode 8, I think, of the Den Academy. This is going to be reversal swing points. This is how you are going to understand if it's going to be a reversal or if it's going to be a continuation. We are just going over how to tell if it's going to be a swing point, right? So we're going to be looking at how these swing points are formed and then how you can form a bias the next day and trade in that direction. And we'll obviously go over 1 hour and 4 hour swing points as well, but we are not going to be getting into how to confirm them yet because you need to learn more. We're just going to be showing how we are going to be identifying if it's going to be a swing high or a swing low, right? So there's two types of reversal swing points. We have a bullish reversal and a bearish reversal, right? There's no other way a swing point can be formed. It's either in the bullish side or it's in the bearish side. So right here we have the bullish reversal, right? So what you want to see with this is this first candle creates its range, and then the second candle takes the low of it and closes back inside this candle's range, right? After that has formed, we then can anticipate the next candle expanding to the draw on liquidity, right? And you want to see these swing points be formed in a key level preferably, right? Now the daily chart's a little different. It doesn't have to be formed inside of a fair value gap or an external high, right? But if we are trading the 1 hour or the 4 hour, it is most likely going to be formed inside of a key level. Right now, for a bearish reversal, it's just the opposite direction. We have a bullish candle, and then we have this candle here that takes the high of this candle and closes back inside of this candle's range. That's how we can confirm that it is now a swing point and going to form a swing point for this candle to continue the expansion lower, right? These are the only two types of swing points. They're both reversals. Now, yes, there are times whenever it's going to be a continuation swing point, but that comes along down the line whenever we form 4 hour profiles and everything, right? So this video is going to be going over bearish and bullish reversal candles. So let's hop into the charts and I'll show you guys what this looks like on a daily chart. One more thing before we get into the daily chart. What are the key levels we're looking for these swing points to form? We are going to be looking for these swing points to form an external range liquidity, right? Old highs and lows, which you just learned in the last video, inside of fair value gaps, so internal range liquidity, previous day high and previous day low, if we are looking at an hourly or a 4 hour chart, and then session highs and session lows, if we're once again looking at a lower time frame other than the daily. So these are the key levels you want to see these swing points be formed. All right, so let's head down to let's head into the daily chart now. All right, so here we are on the daily chart. We can literally just start right here and go over. It's going to be this simple for you guys to understand, okay? So daily chart, daily swing points. What are we forming them from? Previous day low, previous day high, or external and fair value gaps, right? So we can start right here. All right, so right here on this day, we take out previous day low and close back inside the range. What can we expect for the next couple days or just this day right here? Expansions to buy side liquidity, right? So once again, once we go down to the lower time frames, you can then start marking off previous day highs, if you watched my previous video, to get the draw on liquidity for the next few days, right? So we create this swing point, so then we can form a bias for these days for expansions higher. So this swing point right here was formed off of a previous day low. When's the next time a swing point is formed? Right here, right? So where is it? Inside of a fair value gap, right? We have this fair value gap right here. Let's mark it off right here. And then get rid of this line, because what happens before we make the expansion, right? As you guys see, this candle here closes below this candle's range. So this candle takes the previous day low, closes back inside, then we can form a bias for the next day for an expansion higher to external range liquidity, which is above this high here, right? When's the next day a swing point is formed? Right here. Right, we take this low, close back inside. We can now anticipate this day and this day trading higher until we reach external liquidity, right? So we reach it right there, and then we have this small retracement, right? So this is just consolidation right here. We're just consolidating, but right here, we take out external range liquidity, and then we close back inside this candle's range. So what are we looking for this day? An expansion lower, right? We take out this low, and maybe there's a setup on the lower time frame, right? But once again, once we close back inside this candle's range, then what can we say? Okay, we have formed a swing point, right? And where's this candle candle's swing point below a previous day low, and then we take external, and then we close back inside this candle's range, so then we can anticipate this day trading lower, right? It trades lower and then closes back inside this candle's range. What can we expect then? Trade higher, right? So we trade higher, and then when's the next time we form a swing point? Right here. But then this candle comes down and taps into a key level, a fair value gap. What's it do? Closes back inside this candle's range. What can we expect for this day and this day? Right? Reach this high. Do we reach that high? Oh, we make equal highs. So the draw on liquidity is still on the table. So we can anticipate this candle trading to this high, right? And then once again, right here, consolidation. So what happens here? Well, we take previous day high and close down outside of the range. So we can expect this candle to then trade to like all of these lows, right? All these lows are on the table because these are relatively equal. Like these are all relatively equal. Do we swipe that low? Yeah, we dig beneath that low, right? But what happens here? We do not close back inside this range, and then this candle closes back inside of this range after taking this high. This is whenever lower time frame bias comes into play, right? Do we have to go lower from here? No, because we've already swept out all these lows. So what do we need to wait for? A swing low to be formed to then say that we can now trade higher, right? So what happens right here? A swing low, or sorry, previous day low swept, closure outside of the range, right? We close above this candle. Now what can we expect for these days here? Trade higher until we reach this buy side. We trade higher all the way up to this buy side. We take external range liquidity. We close inside of this this candle right here. So what can we expect for these days? To trade lower until we reach a fair value gap. We reach a fair value gap. So now we want to see, are we going to form a swing point inside of this fair value gap to trade higher? Yes, we do right here. You're wrong this day, right? Nothing you can do about it. This continues to trade lower. Now it's disrespected, and now we trade lower, right? So now we trade lower. This candle right here does what? Comes down, sweeps out this low, closes outside of this candle's range. What do we wait for? A swing low to be formed if we are going to be trading higher. What happens here? Previous day low swept, closure outside of this candle's range. So we can look for this candle's high to be taken on this day or this day. Well, it's not. But what happens? Fair value gap gets tapped into right here. Closure inside of this candle's range. We can now anticipate this day to trade higher until we get to this high. And then the lower time frame comes into play for your intraday bias, right? I mean, whew. Okay. So right here, once again, this low gets swept, closure outside of the range. This is a consolidation candle. How do you understand if it's a consolidation candle? It's literally if it's an inside candle, right? So you guys can see that this candle right here, it didn't take previous day high or previous day low. That's what's identified as a consolidation candle. What do we wait for if this is going to be a swing low? Excuse me. We are going to wait for an expansion above this high and a closure above this high to then say that this is now going to become a swing low. Excuse me, right? Right here, we expand and close above this high. That's how you can say, okay, this is now a swing point. We are most likely going to be trading higher until we reach a draw on liquidity, which is this high and this high here, right? So that's how you can identify. Another way to identify if this is going to remain a swing point, even though we closed outside of this candle's range, right? So as you see, there's no swing point formed here. And why aren't we going to trade this candle lower? As you guys see, we take this high and close inside. This high is not taken yet, right? You're not trading against equal highs. Do not do that. If we create a failure swing is identified whenever we make equal highs. Like these are failure swings on the lower time frame. Whenever we do not create a liquidity run, right? But on the higher time frame, this high is the draw on liquidity. So you're not going to be trading against that. Okay, whatever you take from this video, do not trade against failure swings, right? And if you guys want me to, I can go in depth with that. I can make that another video, but that's how you can do not pattern trade this if we have a draw on liquidity, right? Up here is our draw on the higher time frame. Okay, so what happens here? We create a swing point after taking external. Once again, what happens after we take external? We come to internal. What happens here? We take previous day high, close back inside. What can we expect? Internal range liquidity. We trade into it. We close outside of this candle's range, but we tap the key level, right? You have to understand. And if let's just go down to the lower time frame here, and this is how you can look. What happens here on the 4 hour? We come into this daily key level and we close as a swing point, right? You do not need the daily to close as a swing point anymore because this 4 hour has. Okay. Now, if we even just look right here, what happens here on the 4 hour? We tap into this okay, yeah, we do to the tick. We come into this fair value gap and then we expand higher, right? If we just go down to the 1 hour, right here. Once again, we tap into this fair value gap. It looks like equal lows, but you guys saw that we tapped into it to the tick. Create a swing point. We can now say this high is the draw. Do we make equal? No. We can now say that this high is the draw. As you guys like, right here, what happens? Tap into a key level, fair value gap, close a reversal candle. What can we say? This high becomes the draw. All right, so you guys see right here how you can use this on the lower time frames. All right, but I don't even remember. We were over here. Let's remove all these. What happens here? Tap into a daily fair value gap, close a reversal candle. We can now say that this high, these relative equal highs, relative equal highs become the draw on liquidity for these days, right? Previous day low swept, closure outside of this range. We can now expect this day to expand as well, right? So you guys are seeing how these daily swing points are formed. They're really, really simple. Let's go down to the hourly. Turn on these boxes, and now you guys will see how the intraday they are formed, right? So right here on this day, Friday, literally this week, what happens? We sweep session low. What can we say? Closure back inside. We can now say London high and Asia as the draw on liquidity. Both get taken, right? Let's see if I can find an example here. Right here, right? What happens here? London low gets taken. Reversal candle is formed. What happens? We run New York session high. And before that, what happens here? London high is taken. New York high is taken intraday. Reversal candle gets printed, and we tap into London low, form a reversal, and then continue higher. Right here, Asia session high taken. London prints a reversal candle, and we trade lower to London or Asia low, and then continue all throughout this session. Right here, what happens? Asia and London high taken. New York forms a reversal candle. We expand lower. Right? What happens here? London low is taken. We print a reversal candle. London high is taken, and an expansion higher. What happens here? We make relative equal lows. London high gets taken, tap into a fair value gap, reversal candle is printed, continuation lower. What happens here? London high is taken, reversal candle printed, London low gets taken, right? No reversal candle printed, so this New York high stays intact. What happens here? Asia and London have relative equal lows. We take the highs during New York, reversal candle is printed, we continue lower, right? This is not a reversal candle. What happens here actually? We actually close a little outside of this range. Okay, hold on. Go to the 4 hour. What happens here? Previous New York session high is taken, which is previous day high. A 4 hour reversal candle is printed. So let's head down to the hourly. What happens here during New York? We print a reversal candle here inside of a fair value gap. We can now say that this low gets taken. What happens? We continue down to this low. What happens here? We take London high, we print a reversal candle, and we continue down to Asia lows. And that's actually FOMC, so you see FOMC even delivered us lower. What happens here? London takes Asia session, we print a reversal candle, and we continue higher. What happens during New York session? Tap into a fair value gap. Intraday New York session low has been taken, prints a reversal candle. We can now say that this high becomes the draw. I mean, you guys are seeing how this is all formed. We can go to the daily here. We have this low taken. Head down to the 4 hour so you can trade intraday. Ooh, 4 hour does not print a reversal candle. However, the hourly does. We sweep out this low, print a reversal candle, and expand higher. Right? This is really, really simple stuff. I don't want to get quite into the 4 hour. That's why you guys saw me do the 1 hour and the daily the most, because 4 hour is more of 4 hour profiles, which I want to get into later on in this series. So this is how swing points are formed, and I wanted to go over this now because this is how biases get formed and how you find a draw on liquidity. All right, so now that you understand reversal candles and how they are formed, then you can put a draw on liquidity together, which we will maybe get into in the next episode. I'm not sure if I have another video I want to make or not, but that's going to wrap up this video. I hope you guys enjoyed. Let me know if you want me to do reversal or failure swing videos, right? I can do that as well. So that's going to wrap up this video. Hope you enjoyed. I'm out. Peace.